Hello and welcome to Martin Lucas Investor. My name is Sensei and we are here for another important day. We've got PPI data coming in live for us. We've got tariffs and we've got the markets on a risk off alert this morning. So let's get straight into the show. Thank you everyone for tuning in. Let's make sure we are running okay. I did have a small um, technical issue. Let me just sort this out. I've just realized I've made a mistake here. Thank you everyone for tuning in. We will be looking at a lot of data today. I've just realized I spelled tariffs wrong in the title, so I've just changed that. So thank you everyone for tuning in. We're looking at the markets right now. The only things that are up this morning is gold and the VIX, highlighting more uncertainty. Gold breaking that important 3,550 barrier, potentially leading us on to all-time highs with some of the geopolitical tensions we are seeing in the markets over the last 24 hours after a very good CPI print, but there are some concerning factors we have to look into this morning. So we've got gold up on the day, 50%, sorry, 0.5%. We've got VIX up on the day as well. We've got silver flat on the day, and the S&P 500 is leading some losses of 0.56%. So markets all over the place. Once again, unfortunately, you get some good data that the Fed would like to see. Not the best data, but good data. It's a surprise to surprise CPI data yesterday, but now we're looking at the Fed's preferred metric PPI that's coming today. Let's see if that solidifies what CPI said yesterday. We'll be covering that live on the show. If you have just tuned in, please do hit the like button. So yeah, the S&P does look like it's might be topping out. We've got sort of a bearish indecision candle going on there. Wouldn't call it a shooting star, but I'd certainly say it's an indecision. You've got wicks on both sides. You have ended up being red. The wicks higher on the upside. Ending up to down, and today we're seeing the follow through. So let's see how this daily candle finishes today. If it finishes something like this, and this upwards trend we've been on could be ending. Um, and that is being seen in the crypto markets as well, where we're seeing something like the altcoins really selling off, Bitcoin coming down, right straight back down to around 107,000 currently. XRP got rejected from the $2.30 level, coming up to its lows of its day right now. We've got altcoins being crushed on the lower end of things. On the lower end of my watch list, Matic down 6.5%, Link down 5.4%, GRT down 5%, Mana down 4.4%. Some altcoins on my watch list, Filecoin down 4%. We've got VeChain down 3.5%, HBAR down 3.6%. Where's ZBCN? ZBCN is not leading the gains; it's only down 2.47%. So a bit of a red day, a bit of a risk off day in the markets here today, but ZBCN is seeming to hold levels better than some higher market cap coins. Let's see if there's anything else notable going on. Ethereum also down as well, 1.3%. I would imagine Bitcoin dominance is liking this, and it's heading up close to our target BTC.D. I haven't looked at it, but I imagine it's up. Yeah, it's up. It's not really up that much, up 0.03%, holding at these levels, but it's certainly not down on the day. Let's get on to the news of today. So the one big thing today is PPI, which again we're going to be looking at. So with today's PPI data set to shape the inflation outlook, now it's the time to review how your portfolio hedges against risking costs. So we've got PPI on the news today. We're going to be looking at CPI as well. Let me just make an amendment to this. I apologize for the stream being late. I had an internet problem, and there's just a few things that have not gone my way this morning, but we are still here. Let me just make sure everything is running smoothly. The comments are coming through. You guys can hear me fine. Let me just make sure there was no lagging at the beginning of the stream. Let me edit this. Okay, let me update that. Okay, I think we're good. Let's make sure the comments are coming through and then we'll get on to the top stories of today. We've got Carl in the show. Morning, we've got Motto 18. Morning, thoughts and prayers to all involved in the air disaster in India. Yes, Kazansky, what a terrible disaster we've seen unfold in India. A flight heading to right around the corner from me to Gatwick Airport. London Gatwick Airport. It was arriving to British nationals on board, people from all over the world on board that flight, and it's unfortunately crashed. So that is really upsetting to hear. Um, a 4.5% drop looks like a mountain sometimes, says Motto 18. Yes, it does. Depends how much you're in. Dollar getting crushed. Yeah, dollar is down very, very low, almost making new lows of this cycle. Um, I guess XRP will keep dropping all weekend due to war. All stocks, we'll see what happens. Things unfold, phone calls can be made, things can reverse. But for now, it does look like we have topped out at $2.30 for XRP. War on the horizon with one of the biggest exporters of oil and gas. People still shunk oil stocks. Kind of hilarious. Yeah, oil stocks we've been bullish on. I think the market's very crazy, especially after yesterday. What's going on yesterday? We had a lot of good news. XRP still went down. I'm pretty worried about it. Yeah, you shouldn't be worried. You should be prepared for all scenarios. It is disappointing to see. We did have good CPI data. We had good data. However, it's the geopolitical side of things that aren't looking very good at the moment. Tariffs are back. Letters are being sent out. We'll get onto the news. Interesting to see ZBCN still holding. Yep, it's still holding, and despite everything. Big ZBCN unlock tomorrow says, thank you for that information. I want to Maha XRP. I don't know what you mean, DD Drama Beats. Hope everyone's doing great. Thank you, Matthias, for tuning in. Let's get back to our stories of today, and then we'll come back to your comments. So, all eyes on today's US PPI report, the final inflation print before next week's Fed decision. Economists are looking. For some reason, that's not updated properly, so I'll come back to that. I'll update that for the newsletter later after the show. For some reason, it's not updated that part. Anyway, on to them, but that's not the most important story. The main stories are the May CPI comes in cool despite tariffs surprising markets. This is from yesterday. So May's CPI was closely watched as the first major inflation reading to reflect President Trump's Liberation Day tariffs, and the data delivered a modest surprise. The consumer price index rose just 0.1% month over month and 2.4% year over year, both below expectations. Core CPI was similarly tame, rising 0.1% month over month, holding at 2.9% year over year, despite concerns that tariffs would spike costs. Inflation remains subdued for now. Falling gasoline prices down 12% year on year provided a key disinflationary pressure, while prices for vehicles, furniture, and other tariff-exposed goods declined. Categories like major appliances and toys did see increases, but many firms appear to be relying on pre-tariff inventories and delaying price hikes. The report was particularly critical because it was the first to reflect the 10% baseline tariff and additional duties enacted under Trump's sweeping April trade reset. That's why the eyes were all on yesterday's CPI and all on today's PPI, because this is when analysts are saying we should start seeing these tariff implications come through, which we didn't on CPI. Either they're not inflationary, or the businesses themselves are taking the hits. So, while tariff sectors like autos and electronics, the May CPI suggested limited immediate pass-through to customers. Economists caution, however, that this may be short-lived. As inventories shrink and supply chains adjust, inflationary effects could emerge later in 2025. Fed Governor Andrea Colger noted, we are already seeing the effects of higher tariffs, which I expect to continue to raise inflation over 2025. Bradley Saunders of Capital Economics added, tariffs are inherently inflationary, regardless of the President Donald Trump may convey. Markets took the tame print as positive, with Treasury yields falling and expectations growing that the Fed will maintain a wait and see posture at the next meeting. The muted inflation response has given some breathing room to consumers and policymakers, but analysts broadly agree that tariff effects are not yet fully priced in. The real inflation test may still be ahead. My thoughts on this are: analysts were bracing for tariff driven inflation to pop May CPI, but it didn't. For now, it looks like businesses are holding the line, cushioning consumers with inventory and delayed pass throughs. Maybe this won't last forever, but the market just got a rare win. Tariffs haven't hit yet, like many analysts were calling for. So yesterday's CPI was definitely a surprise to many people. A lot of people calling for inflation to start hitting these businesses and more importantly the consumers, but it didn't. So take that as you will. That's definitely a win. That's definitely showing that it's two things. One, it's not as bad. The inflation is not as bad as people thought. It's not going to be passed through, or it won't affect CPI, for example, or the businesses are delaying it as much as possible. They've got inventories that they're going through. They are taking the hit themselves and not passing on to consumers. That's why we want to see the PPI from today to solidify what we saw yesterday. So markets are bracing for May's PPI ahead of as Fed watches for inflation clues. Remember, next week is going to be the FOMC report, and we pretty much know that they're going to hold rates where they are, but it's what Fed Chair Jerome Powell is going to say, and PPI coming out very soon on Martyn Lucas Investor. We're going to be covering it live. Will give us a glimpse of the last data point that they're going to be using in next week's FOMC report. So all eyes on today's US Producer Price Index release, a critical inflation signal the Fed watches closely. Economists expect PPI to rise 0.2. I'm actually just going to update the first part of the newsletter with this because something's gone wrong on the first little section, and I want to update it. So I will do this in 20 seconds. So let me go here, my posts. I'm going to go and edit this. And then update it with this. So if anyone's got the newsletter and they want the updated version, sometimes we amend things or we add new news. You can always. Why is that not working? Update now. There we go. That's updated. You can always just go onto the web or the app and refresh it, and it'll be the most up to date. So all eyes are so today PPI, very very important. We're covering it. Yesterday CPI came in cool, great. Tariffs weren't affecting it. Today we get the concrete evidence if that's true, and that all relies on PPI, a critical inflation signal to the Fed watches closely. It's their preferred way of watching things, as their preferred data metric. Economists expect PPI to rise 0.2% month on month and 2.8% year on year for May, up 2.4% in April, while core PPI, excluding food and energy, is forecast to stay flat at 3.1% year over year. The release follows a cooler than expected CPI report, but PPI looms large because it captures producer level inflation, often a leading indicator for consumer prices. Major analysts warn that while recent CPI and PPI readings have been mixed, any upside surprise in the producer prices could quickly shift market sentiment, boosting the dollar and weighing on equities, especially in rate-sensitive sectors. This might even be more important than yesterday. In fact, I think it will be more important. Why? Two things. One, PPI is what Fed wants to use. Number two, markets reacted pretty well to very well to yesterday's CPI readings. That means the markets have already priced in good CPI. They're happy about the data. They're getting ready for next week's FOMC report. If PPI contradicts what CPI said yesterday and it doesn't solidify it, and we get a negative reading, that will make the markets a bit worried, a bit scared, and it will bring the markets down. Not only that, today we're getting geopolitical situation where the markets are already down 0.5% on the S&P futures. If we get a bad PPI print, the sentiment already in the market is already bad. If you add worse sentiment to it already badly performing day on the markets, then it accelerates the move towards the downside. So we are going to be anticipating a volatile PPI volatile period when PPI gets released in just under half an hour. In just over half an hour. We'll be sending you over to Martyn, who will be covering that PPI. So. With the Fed signaling a cautious stance on future cuts due to inflation and tariff risks, traders are bracing for volatility. For investors, the message is clear. PPI may set the tone for Fed policy and market direction through the summer. My insight: the Fed has been clear. It's data dependent, and PPI is part of that data. After a cooler CPI, today's print will help clarify whether inflation pressures are easing or hiding upstream. Sticky producer prices will signal more work ahead. So main stories of the day: PPI coming out today. If you are here with us in the show, stay with us. We'll be bringing you that data very shortly. Please make sure you hit the like button, subscribe if you haven't done so already. Let's have a look at the markets because they are moving quickly. Let's have a look at the S&P. S&P is down back below 6,000. What's it doing on the 15-minute time frame? It's looking a little bit bearish. We are definitely in a downtrend. Bad PPI will send this chart straight down, in my opinion. Again, nothing I say on the show is ever financial advice. This is my thoughts and opinions only. Let's have a look at your comments. Who is here with us? Craig is here. Mike is here. Drama in the chats, apparently. Good morning. Thank you for the valuable information that you provide us every morning. Let's go, ZBCN. Thank you, sir. Let's hit that like button. Should we do it? Should we do Phoenix? Should we do Phoenix? Let us know. I'm here. What's the world's boy? We buying anything, selling anything? We don't give financial advice here. We just cover the markets. Sometimes we buy, sometimes we sell. Okay. Let's continue. Let's see if people want Phoenix. If they do, we will put it on. So, oil is down slightly after yesterday's big surge towards the upside. That is actually chart of the day on the newsletter. We cover the charts, but you can see double bottom back into resistance, a strong level of resistance around these areas. If it does get back above $72, then the bull market will be back on oil. We're keeping a close eye on these levels on oil. An interesting news story: World Bank ends nuclear ban after 66 years. So just yesterday we were discussing nuclear energy global prospects, and today the World Bank has made headlines by banning its decade-long ban on financing nuclear power projects by lifting its 66-year ban on financing nuclear power projects. President Ajay Banga announced the policy shift on Wednesday, June the 2nd. It was quite late into the day as well, so it was before. It was way after we put the newsletter out yesterday, calling it an essential to help developing nations meeting skyrocketing electricity demand.
Matthias donated 59 Norwegian kroner through a super chat. Phoenix emoji, Phoenix emoji, Phoenix emoji.
Matthias has spoken. He loves it. Phoenix emoji, Phoenix emoji, Phoenix emoji.
The year is 1991. Birds and
You guys know the drill. The music comes on, you hit the like button, we get ready for PPI. So everyone who's watching, I know it's the morning, I know everyone's a bit upset with the markets, but that doesn't mean you can't hit the like button. We're going to be here with you throughout it. So make sure you hit the like button. Once you've hit the like button, vote in the poll, come over here and hit the like button on the comments. So let's play Phoenix again. Let's get the likes up. Thank you, Matthias. Let's do it. We'll do it from the beginning. We'll start from the beginning because we love to hear the eagle.
The year is 1991. Birds and people are living together in seemingly perfect harmony, until one day a young man catches fire. This is Phoenix.
everyone. Smash that like button. Let's see if we can turn the day green. We're waiting for PPI. Let's see. We're not even at 100 likes. What's everyone doing? Smash that like button. Let's do it. I'm loving the hearts in the comments.
Get ready for verse 2, Electric Boogaloo.
You see the truth behind the veil, and you know that they're just looking for attention.
Not 95 likes. Let's get to 100. 4 more people. Who hasn't liked the show? 200 people watching and only 96 likes. What's going on? People are being lazy. Let's do it. Oh, there we go.
You burst in a fire, burn, a thirst and desire. You transform right up in a flash. You spread your wings to rise from the ashes. Phoenix, you burst in a fire, burn, a thirst and desire. You transform right up in a flash. You spread your wings to rise from the ashes.
Thank you, everyone, for participating in that. Let's go over to the main stories of today.
Information that's being collected by investors and the marking issue that you're describing.
But what mark-to-market assets do is it forces
for clear rules and an ability to build in the United States.
crypto.
So we'll come on to Bloomberg. They'll be doing their main stories of today in a second. Thank you, everyone, for hitting the like button. Smash the chat. It's free. I'm loving the emojis in the chat as well. Let's see what the top stories are on Bloomberg.
Up-to-the-minute geopolitical.
It will be there in a second. We'll come back to it in just a second. Standing on the moon. Let's get it, guys. Let's do it. Sold all my XRP. I can't handle the volatility. I'm sorry about that, DD drama. Maybe that's the right thing for you. Volatility isn't for everyone.
If the current level of
This is the song Martyn should do. daily get me hype tune. Yes, Nick Jones, it's the daily tune. We are waiting for PPI data. We've got some top stories for you today. We're bringing to you. We'll go to Bloomberg first, then we'll go to our own stories. PPI is going to be such an important data that's coming out in half an hour's time. We'll be covering it live on the show, so do stay with us. We've got some charts to get us prepared for that, but let's go to Bloomberg.
This month, equity futures at the moment, your scores look like this. We're down by 0.6% on the S&P. Similar move on the Nasdaq 100. On the Russell, we're down by more than 1 full percentage point. If you turn to the bond market, some better news. Yields down by 5 basis points. A 10-year creeping towards 450 in yesterday's session, back down to 437.30.
You can see the equities are down. If PPI comes in bad this morning, it will accelerate that. If you've got bad sentiment, bad news, both things go together and you go down straight away.
Before we get there at 8:30, 29 minutes away, some economic data, US PPI and jobless claims.
And PPI is going to be important, right? Of course.
That's what we're watching. Half an hour, just under half an hour's time. We've got PPI, jobless claims. PPI is the main important one. We've then got Besant on the Hill, 30-year auction as well, and then we've got Trump signing the EOs at 3:30 Eastern time as well. So a few things coming up for you guys today.
Because we don't even know what the tariff rates are going to be. The president made that clear yesterday. In the next 2 weeks, he's going to be, for some countries, sending out letters. That's the deal. Take it or leave it.
Inflation data, noise or signal? It can be both. It can be both. You can sit here and say it's noisy because of the tariff story and the inventories we need to work through, and that maybe you're going to see higher prices later this summer. But you also have to acknowledge the signal. 4 consecutive months of softer than expected inflation data in America. Adam Poston of the Peterson Institute with us 30 minutes ago, accepting there's some information in that. Starting points matter. This is a better than expected starting point.
And also because it's 4. This is a trend. We're seeing declines in airfares, cars, clothing, of course, also a drop along the energy space. This was welcome news to the White House. And I know Neil Dutta's
We'll come back to that shortly. Someone's just asked, what do we expect in 30 minutes more dump? Well, if I knew, I would be a billionaire because I would put a call or put option, or put every single penny I have, sell the house, and then there we go. But well, you need to be ready for anything. The main thing is just to see if it look, the market's in a bad direction right now. If as soon as we get that PPI print and it's bad data, we can expect the market to definitely dump much further because the geopolitical tension is already there. The markets are already down on the day. Bad PPI would go against a good CPI yesterday, and then it will draw the markets down even further because of the sentiment in the markets right now. Let's see if they say anything more interesting.
The next week, fantastic exchange with Jeff Gunlack of Double Line.
No, they are not saying anything very interesting. So we'll come back onto the PPI news shortly. Let's just look at this nuclear story. Actually, I'll leave this for you guys to read in the newsletter. The newsletter's link is now first link in the description. It is pinned, and I've given it to you again here. It has all the information you need to know every single day. So oil has spiked 4% yesterday, down slightly today at resistance. So oil surges over 4. This is one of the reasons the markets are down. Oil surged over 4% on June the 11th, reaching a 2-month high as the Middle East tensions escalate and optimism around US-China trade deal lifted demand forecasts. So the US began evacuating embassy staff from Iraq and authorized military dependents to leave bases across the region amid fears of a US-Iran conflict, potentially disrupting supplies from Iraq, OPEC's second largest producer. President Trump's hawkish remarks on Iran's nuclear ambitions reinforce the geopolitical risk premium. Meanwhile, news of a US-China framework deal buoyed sentiment on global energy demand. Brent crude oil closed at around $70, with WTI around $68, rebounding from recent losses tied to OPEC's supply plans. While OPEC is set to increase production by 411,000 barrels per day in July, the market remains sensitive to supply threats. A 3.6 million barrel drawdown in the US inventories further signaled firm demand, especially in transport sectors. Still, analysts warned that the rally may prove short-lived and sluggish demand amidst sluggish demand growth, US pressures for lower prices, and persistent macro uncertainty. For investors, the takeaway is a volatile energy market where price spikes can be swift, but staying power may be harder to come by. So my thoughts on this: oil spike is a reminder in this market headline moves bows. With Middle East risk flaring and inventories tightening, price action matters. We break down the oil chart in the chart of the day. Don't miss these levels traders are watching now. It was part of our chart of the day. We've got the GameStop story might come back to, but here is the main story for today. Let's have a look at it. It is the deeper dive. Global risk-off sentiment intensifies. Market reacts to trade turmoil and geopolitical strains. Why are markets rattled? The question everyone's asking today. A confluence of trade uncertainty, geopolitical risks, a mixed macroeconomic signals triggered a broad-based sell-off across equities, crypto, and commodities. I'm going to put the PPI countdown on the clock so everyone knows when that's coming. Let's change this to PPI. Let me put the PPI countdown on the clock. PPI, because that is what we're watching coming out very, very soon. PPI data, and it's coming in about 21 minutes. There we go. So, investors fled risk assets, favoring safe havens like gold and Swiss franc as the MSCI World Index dropped 0.1% and the S&P futures fell 0.6%. So why is everything down this morning? Well, Trump unilateral tariff take it or leave it approach. President Trump announced plans to send letters to trading partners within 2 weeks, unilaterally setting tariff rates ahead of the July the 9th deadline. You can take it or you can leave it, he declared, signaling a hardline stance. So bye the time where everyone was going to start negotiating with Trump and everyone's going to start creating their own deals. It was not, like, obviously it sounds like it wasn't possible. It wasn't feasibly possible. They couldn't negotiate with all those countries, and now we're back to a new stance of take it or leave it, which reminds us obviously of Liberation Day. That's the level. So it looks like it's probably going to be lower than Liberation Day, but they're not really negotiating anymore with most of the countries. Yes, EU, China, maybe India, UK, there might be deals in place again. The UK deal, the details are supposed to come over the next few weeks. That hasn't. The China deal is basically the same deal they had last time after the Geneva. We don't have the details of the China deal. It sounds like what happened after their meeting in Geneva in. I think they went to Switzerland, didn't they? When they had those meetings, they came out. The US was very happy with their discussions. China was a bit more subdued with their reaction. They had some sort of framework in place. Fast forward a month, it all fell apart. They went to London. US has come out and said it's all great again. We've got a framework. Trump saying deal done. Well, it's a framework. The deal's not done. He still has to do it. So again, same situation straight after the Geneva. Do we have a deal or do we not have a deal? So that's going on. And we've got the UK where we have some sort of deal, but things were supposed to be ironed out in the next few weeks. That hasn't happened yet. I think they've got a deal with India, and all the rest of the countries that they said that they're going to start negotiating with. Well, now they've got a take it or leave it letter coming towards them. The EU trade deal hasn't been sorted yet. That's just been kicked down the can. So do we have anything solidified from these tariff deals? No, and I think the market's digesting that a little bit. So China's deal skepticism, despite Trump's claim of a done deal with China, retaining 55% tariffs on Chinese imports, markets remained unconvinced. Analysts noted the agreement lacks substantive changes, with AMP's capital Shane Oliver calling it a truce, not a resolution. We have no details. We've got 55% from on Chinese imports and 10% the other way around, but all the rare earth stuff, the AI stuff, things that affect the major companies. Remember the AI tariffs, all major. Nvidia, one of the biggest companies in the US, has obviously come out and said a few bad things about that during their earnings call last quarter, and that we haven't seen any update on that. And those are the ones that matters. We have no meat to the bones at the moment. Also, global ripple effects. The US UK trade framework offered limited relief, while negotiations with the EU, Japan, South Korea remain unresolved. Treasury Secretary Scott Bessent warned of no extensions for countries not negotiating in good faith. So that's the one thing. Tariffs are just all over the place. Take it or leave it, 2 weeks. No solid deals really been done yet. And they've always said, I don't know, for the last 2 months, next week, in a couple of weeks' time, we're going to have more deals. In a couple of weeks' time, we've got more deals. EU deal, not sorted. UK deal, sort of sorted, but the details haven't really come out yet, or the stuff they said they're going to continue doing hasn't actually happened yet. China deal, same situation we were in with the Geneva situation, the Geneva talks a month ago. And every other country, Japan, South Korea still unresolved, EU still unresolved. Every other country, they haven't really negotiated with them. They're just going to send them a letter and say take it or leave it. So tariffs all over the place. Again, this is not me saying I'm pro-Trump, anti-Trump. I have no, I don't come on here and really give my opinion on that sort of stuff. But we're just looking at facts here about the tariffs, and this is what the market is thinking anyway. The geopolitical flashpoints. That's number one, why the markets are down. Number two, geopolitical flashpoints. The Middle East tensions. Iran's threat to target US bases if nuclear talks fail pushed Brent crude over $70 a barrel. Gold surged. Evacuations of US personnel from Iraq intensified fears of a regional supply shock. So we've got something unfolding there, which is not good to see. We've got Air India crash. That's again another terrible disaster. A fatal crash in Ahmedabad sent aviation stocks tumbling, with Indigo and SpiceJet falling over 3%. A terrible incident that we've seen today. Our thoughts and prayers are with those affected. Macroeconomic weakness. We've got UK GDP contraction. The UK economy shrank 0.3% in April, worse than forecast amid tax hikes and weak consumer spending. US inflation stagflation. May CPI showed muted price growth of 3.1% year over year, tempering hopes of Fed rate cuts. The 10-year Treasury yield eased. 3.1% is nowhere close to their 2% targets. It's a good print for yesterday. We got some relief, but inflation's sticky, and the whole of this year, it looks like the Fed is pricing, or the market's pricing in only 2 rate cuts. We haven't got any yet. We're not going to get any next week. PPI will give us an indication of how that will go in the summer. But that's why the markets are down, and they're all serious concerns. Analyst insight. So Chura Chanana from Saxo Bank, I apologize if I said that wrong. The gap between risk-on positioning and real-world risks have stretched too far. Markets are repricing a prolonged trade friction and Middle East volatility. Interesting. Vinod Nair from GeoJit. Valuation concerns and rising oil prices are forecasting a reassessment of risk. The tariff overhang could delay corporate earning recoveries. What do we need to watch next? Well, firstly, it's PPI in 13 minutes. Then it's next week's Fed meeting or FOMC meeting. Then it's the July the 9th tariff deadline, with the US extends talks with the EU and Japan, or push through another wave of duties. Fed meeting. Despite soft CPI, sticky inflation may keep Fed cautious. Iran nuclear talks. The further escalation could lift oil past $75, intensifying stagflation fears. So why it matters? Today's sell-off is a clear signal that global risk environment is resetting, with trade, geopolitics, and economic softness converging. The path forward demands sharper positioning and disciplined risk management. Markets are no longer pricing in perfection, they're hedging for impact. So we're getting prepared. Again, there is the bullish side to all of this. Tariff deals get done, EU deal gets sorted on a phone call, China deal gets sorted on a phone call. That will send market sentiment up. PPI comes in good today. The AI chip ban to China goes away. Companies are still making money. Earnings calls have been good. Inflation comes down, and then you've got all-time highs on the horizon as well. But you need to look at this side of things, and this side of things doesn't look very good for today, and that's why the markets are down. Be prepared for every scenario. Be prepared for worst-case scenario where inflation comes in bad. We've got tariffs going up again. We've got bad deals being made or no deals being made. Be prepared for the downside. Be prepared for the upside. Be prepared for a sideways market, and you'll come out a winner. A diversified portfolio, which is something I've always gone on about, being exposed to the US, being exposed to Europe, being exposed to emerging markets, being exposed to gold, silver, bonds, all of that stuff. You'll be prepared for all situations. Again, that's not financial advice. That's just an example of a sound portfolio. That will work for many people. Again, depending on your age and stuff, that will all depend. Top gainers, we've got Broadcom, going up 3.38%, continued its uptrend after raising guidance. Starbucks is up 4.3% after Citi raised its price target to $95. Tesla's up slightly. Gold is up today. Indigo is down. GameStop is down. And MicroStrategy is also down today. We've got PPI coming up today. We've got I apologize, that should say 8:30. Initial jobless claims coming out today as well. We've got the chart of the day is WTI crude oil. If you want all that information, that deep dive was definitely a lot of information to understand what's going on today. I'm going to give you the link to newsletter. Please consider signing up. There's a free plan, annual plan, monthly plan, and the annual plan is definitely the best value for anyone looking to sign up. So let's have a look at your comments. Let's see how the markets are getting ready for PPI. S&P futures still down 0.5%. Markets are down. Gold is up. Anything else? FTSE's up actually today compared to the US markets. The FTSE is very close to all-time highs. What else do we have? Every single cryptocurrency on my watch list is down apart from dominance on the stablecoins. Bitcoin is basically at its lows of its day, down at $106,978. Remember, 106,000 is the line in the sand. That is the level we need to keep an eye out for. If anyone watched if anyone's on the premium Discord, who's on the premium Discord? Who has watched the training videos? There is the link to the premium Discord. We're doing training videos on the charts. Everything I know about charts, you can know about charts as well. Who can tell me what that candlestick is? We covered it on our last lesson. Let me see if I can bring up the video. Maybe not. Let me see. It was on part 3. Let's see if I can bring it up. Can anyone tell me what that candlestick is called and what it signifies? Who was in the Discord premium? You would have learned about this in your last lesson. Uptrend, candlestick, downtrend. What's it called? Again, some people would have said that's a bullish candle, and we told you before this candle occurred on Monday what this candle is. Some people would say that is a bullish hammer or it's continued uptrend. However, a big wick towards the downside, small body, closing in the green or slightly in the red is shooting. It's close. Shooting star would have been if it's if the wick was to the upside. If the wick was on the upside, and that's why it gets a bit confusing. If the wick's towards the upside, that's a bit of a stronger signal, and that's a shooting star. But if the wick's towards the downside, what's that called? Bearish engulfment? No, bearish engulfment would be a candle like this, where you've got a green candle here. The next candle is a full body engulfing the previous candle. Once we do finish the course, we're going to do some live sessions where we do some Q&As and do some live lessons as well. It's a hard one. That red candle is a dump lot. No, this one here, this one that you can't really, it's just a wick basically on the downside. It's Walker Wonders. You're close. It's a type of shooting star. It's called something else. Let's see if anyone guesses it in the chat. If not, I'll just have to tell you. Let me see if I've got the slides. Bearish pin bar or inverted hammer. Bearish pin bar, inverted hammer. It's not the one I'm looking for. It's, let's see, no one's gonna get. Let's see, there's not. Let's see what your chat's saying. These candles don't mean much right now because at this moment the whole market's looking at Trump. Nobody knows what he'll say or do. Well, if you looked at the training videos and you looked at that candle, you would have been prepared for the next today's candle at least. Thor hammer. No, it's called it's a hanging man. It's a hanging man candle. Shooting star would be if the wick was towards the upside, like that, and the candle was here. and some people think this is a bullish candle because it's like a hammer. However, it's called a hanging man, where you've got a small body, normally slightly in the green, and a big downwards momentum there. So it's after an uptrend, this happens, and then you get your downtrend. And that's on the daily time frame. Anyway, let's get back to Meteor. I love it. If you do want to learn about candlestick patterns, if you want to learn everything I know about trading and charts, and again, I don't use my um, my 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 knowledge on this to day trade. I use it for my long-term investments, or if I'm going to want to take profits or take or enter a position. It all goes hand in hand for whatever you're using it for. So it's not just the ones that want to day trade. Okay, so let's get ready. We've got 5 minutes until we go over to Martyn for the PPI print. Let's see if Bloomberg is saying anything right now.
The government's deficits year after year, and I think most Americans have an issue with that. You look, a Gallup poll.
Nothing interesting. Okay. So Bitcoin above 106,000 is still fine. XRP got rejected at $2.30. That's one thing we've been looking at. Stay with us. Have we got 150 likes yet? Let me check. 140 likes, 300 people watching. We should have many more. We're coming straight up to PPI. Everyone, please hit the like button. We are here every day covering all the news that you need to know. And the like button is absolutely free. And if you haven't subscribed, that's something for free as well. Just click the subscribe button, stay up to date, the only news channel you need. I'm halfway through the latest video. Walker Wonders, nearly there. You'll see it. You'll come across it. And then the good thing about this course we're doing on Discord is basically it's free, or $2.99, however you want to look at it. It's added after, so for those members, it's free. Because it wasn't part of the perks benefits. But after we do all the videos, we'll do live sessions as well, where we start looking, and live sessions, more videos, Q&As. So it's a never-ending course for you guys on Discord. What time do you wake up to do the newsletter by curiosity? Well, my time zones have shifted a bit because I go to bed late. However, I start the newsletter normally about 3 hours before the show starts. Having done some research the night before as well. The thing is, you don't want to do it the day before because all the news changes. So you have to do it in the morning before, and by the time you started writing it, you might have another news story and adjust things. But the ones that I know I'm going to cover the next day, I do some the night before, and then about 3 hours before the show starts, I get started on the newsletter. Okay, so that's an answer to the question on the chat. 3 minutes left. Do we have any music? Everyone, please hit the like button. Martyn is going live any second now. We've just got his link, so we're going to send everyone over to Martyn. He's going to get ready for the PPI live stream. Martyn, can you confirm? Let me turn the. Martyn, can you confirm that you are ready to go? And I will end the stream. Let me know, because we've got PPI coming any second now. In the next 5 minutes. If Martyn, you can just let me know if you're ready to go, and I'll end the stream so we can go straight into your show. Everyone, get ready for PPI. If it's bad, 106,000 is the support for Bitcoin. If we drop below it, get ready for 101,000. XRP has already got rejected from $2.30. Sort of the support will be around the $2.07, $2.10, and then the ultimate major support's at $2. If we break out of $2.30, get ready for $2.62 or a big move towards the upside. The S&P 500 is basically at all-time highs right now, but it's down 0.5% on the day. We do have a bearish candle on the S&P 500, which looks like it's an indecision candle, which could be coming down. We could start a sell-off, maybe a few percent down if PPI is bad. If not, we can start heading towards those all-time high levels on the S&P 500. So nothing's gold will go up on bad PPI, I would imagine. Nothing major. I mean, Bitcoin, S&P 500 is in a good place. It's very much near all-time highs. Bitcoin, you want to hold 106,000. XRP, you've got rejected from $2.30, so that'll be the resistance. Martin said you got the PPI sensei. We will have it in 1 minute and 30. We'll be moving over to the next show very shortly. Let me see if I've got a message from Martin to see if I can send you over. Where's Martin? You ready? Question mark. Okay. Let me click on Martin's link. Let's see if there's anything going on there. Yeah, PPI in 1 minute and 54 seconds. Okay. Okay. Let's get ready for PPI. It is coming out very, very shortly. We will be doing it with Martin in 3 minutes' time. PPI comes here, so you won't miss it. I'm just waiting for confirmation. Okay, perfect. We're going over to Martin. Thank you, everyone, for tuning in. Straight to the PPI data. Stay exactly where you are. The link for the show, I'm going to paste it a few times. Go straight there for PPI. Here is the link. Sending everyone to Martin. He's going to cover PPI right now. There is the link. Click on that. The show will take you automatically there. See you later. See you tomorrow. Until next time, take care of yourselves and each other. Bye-bye.